we talked a lot about how the share price of AMC will be affected in the event of a market crashing. So with what is happening, at least since the 2 last weeks of 2022 started, now we have more signs and more people thinking that, hey, maybe this thing might be actually be closer than we think. I'm talking about the market crash. All right. So if the market crashes, you know what is happening? Potentially AMC goes to the moon, like literally. That's why it's important to mention this, because even if everything else goes down, this is actually very bullish. This is one of the main catalysts, the main thing that are going to push the short sellers into that corner where it's going to be no choice but to, hey, let me get out of here, because otherwise I'm going to go bankrupt, and I don't want that to happen. So at least 7 signs show how the stock market is breaking down, going down, falling down, potentially calling for a market crash. All right. Financial markets are off to a woeful start for the bulls in 2022. Blame surging inflation, of course, and the Federal Reserve, doing what many people was calling it to do since the end of 2020 and the beginning of 2021, talking about interest rates increasing. But if you think about these 7 items, these 7 points that are kind of pointing out to what may come our way on the stock market, causing AMC to go bananas, let's start with what is the very obvious: the tech wreck. The Nasdaq Composite, I shared this with you earlier. Look, the Nasdaq Composite, if you look at the last month from the highs, let's go to the highs of December, because this is where the rally started to fade. At the highs of December, boom, we are already at a 10.6%, and this is what we actually call getting into a correction territory. Getting into a correction territory means we might see another hard sell-off in the near future. Not that it's automatic, but usually this is what it means. If you look at the Russell 2000, the small mid caps, if you look at the highs of December, well, December, it wasn't even high, but let's just take a look. Boom, 11%. If you look at the S&P 500, I bet you it's going to be the same story. At the highs of December or January 3rd, really when the rally started fading, how much down are we? Only 6.5%. Okay, that's good. We are not actually getting into correction, but the main focus here is on the tech wreck, because bunch of these tech companies, bunch of these tech stocks and growth stocks, your Neos, your Lucid, your Palantir, the mega cap, Apple, Teslas, the Netflix. Talking about Netflix, it's really going down hard after hours now because of the earnings. Actually, no. What is happening? Yeah, 18%. Netflix is down 18% after hour. Look, shares of Netflix are down 18% after growth slow. So people are actually starting to shift away from that, because they're looking for a better way of making a lot of money, especially with interest rates to increase. It's not a matter of if, it's just a matter of when and how many times. So when interest rate increase, it means that the money you were expected to be made into the tech stocks is now diminishing. And you don't want that, because you want to maximize your gains. That's why people are fleeing these tech stocks, So another thing, the semiconductors. Semiconductor stocks have particularly taken it on the chin, with the popular ETF iShares SOXX down 7.3% this week and down 8.5% so far this year. Another, driven parameter, just increasing the tech sector going down. And then we also have the death cross of the small cap. The death cross is really when you have these two lanes, the 200-day moving average and the 50-day moving average kind of, crossing on the way down. It means maybe we are seeing a correction in the play, if it's not already happening. As I showed you, the Russell 2000, where is it? This is the Russell 2000. As you can see that, on the last month, since the beginning of this here, we're already down 11%. So this is big. Now going back to the other sector, this is the death force I just mentioned it, and then you have the S&P 500 on the 100-day moving average, signaling that we might also be, breaking a support there. And you have a bunch of other stocks, the fear gauge, the index. It's very high since the beginning of this year. Actually, the VIX. Let's look at the VIX. You can see that since the beginning of this year, year to date, it gained 54% since the beginning of this year only. In January, it was at 16, and now it's sitting at almost 26. This is huge. All right. So based on this, if you add to it the very cause, interest rates going high, you have nothing but a very good recipe for a market to continue to go down. And when that happens, it will corner and affect everybody. But those who are on the right side of the trade here in AMC stock actually can feel pretty confident. I have about 20 stocks in my brokerage account. I don't even want to count those I have on my non-brokerage accounts, because these are all like, hundreds based on the mutual funds and the ETFs that I have on those accounts. But when it comes to my brokerage account, I don't really care if the 19 other stocks go down to zero. If AMC is going to make me a millionaire, because it balances everything else, So based on this, I don't know about you, but you don't sell a stock when everything cries out for a bullish momentum and going crazy banana. No, you don't do that. You hold on even though it's difficult to see your profits fading, but this might be the pain before the gain. I've seen plenty of times, and it's more even true. I believe it's more even true for AMC. So that's it, folks.